G'day, fools, and welcome to Motley Fool Stock of the Month, where we pull back the curtain on a company that we have recommended to our members that's an active buy inside one of our services. Now, I hope that's got you excited. Before I do that, let me then cover off a couple of details. Firstly, this is important. It's boilerplate, but it's important. Firstly, it's a buy for us right now. Now, we don't have a house view. It's a view of one of our team. I'll introduce you in a second, but it's a buy right now. That might change tomorrow. It might change in a week, it might change in a month, it might change in a year, or it might not change for a decade. My point is, this is done at a single point in time. All of our recommendations ever are always up for review if things change about the company or the future or the price or something else. But right now, we're recording this at the end of April 2025. It's a buy. Next one, last one. We only give general advice, not personal financial advice. What does that mean? It means we can say we like this company. We can't know whether it's right for you, and we're not going to tell you it's right for you. We're going to say we think it's a buy. You have to decide for yourself. That's the personal bit, whether it is right for you. And if you're not sure, go and get some financial advice from a licensed financial planner. So that's the important stuff. I know it's boilerplate, but it's important. We want to get it out of the way. With that out of the way, I'm introducing our Director of Research, Ryan Newman. Ryan, g'day.
G'day, Scott. How you going?
Mate, I'm very well. Not only are you our Director of Research, you run Motley Fool Pro and Motley Fool North Star. And this is a company I know you've liked for a while. It is Pinnacle Investment Management. The code is ASXPN. Not PAN, PNI. Tell us a bit about Pinnacle. What is the business, mate? What does it do?
Well, I want to get your ears ringing immediately off the bat because this is a company that actually generates a higher net profit than revenue. There's not too many companies on the ASX that you can say do that. So a more than 100% net profit margin, but that's what they do. And
That's all like a robbery, but I'm sure it's not. So tell me how that's possible.
It does sound like a bit of a robbery. And when I first heard of it, I was like, how does that work? But no, there's actually two primary components to Pinnacle's business model that really makes that possible. So the first is Pinnacle is essentially like an investment management hub. So it's it's a business that owns businesses. Specifically, it takes an equity stake in specialist fund managers, and it calls those specialist fund managers affiliates. Now, it actually owns these affiliates across different asset classes, whether that be equities, private equity, credit markets, alternatives, you name it. The second core part of Pinnacle's business is the company really provides services, I suppose, to the funds that it operates. So I guess looking at a fund at the most basic fundamental is a fund manages other people's money, and it is to specific mandates to do so. In order to do that, they have a range of activities that they have to undertake, whether that be distribution, marketing, operational, strategic support. These are the kind of services that Pinnacle also provides to those funds or its affiliates. It earns revenue from the supporting services that it provides, but it also generates gains from the affiliates, from the earnings that they pay out to Pinnacle, which, as I mentioned before, is what allows it to generate a higher net income than revenue that it reports.
Nice. So that's a kind of an accounting little trick, right? It gets the money, but the money isn't counted as revenue because not making a sale. It's getting effectively a dividend from the part of the business it doesn't, the part of the business it owns. It kind of banks that lower down the P&L, which is why the cash flows are the same, but they come in on different P&L lines. Is why revenue looks smaller than the net profit. Is that roughly right?
That's roughly right. Yep.
Nice. I roughly that's as good as I can get, mate. I'm doing my best here. Let's then go to so obviously it owns parts of those affiliates. It is exactly a fund of funds because it owns bits and pieces. Why would a fund want to be bought by Pinnacle? How's that deal work? Why does Pinnacle exist even as a business? What's the story there?
Okay, so those services that I described a moment ago, the marketing, the distribution, all of those are quite difficult roles to perform, and they're quite expensive as well to hire specialists to actually do that for them. So I guess in this field, Pinnacle Investment Management really has a very strong reputation for being able to do those things successfully. They also have some really strong relationships with, I suppose, some of the higher names in this business. The ones that actually have to provide the clearance, I suppose, to superannuation funds and all that to actually invest in these sort of funds. So having those relationships, those companies, they really have that trust of Pinnacle to be I guess representing the funds that they are, and that makes it a lot easier for those funds to actually take that next step in their life.
Nice. So if you're a smart investor, you want to run a fund, you don't have to deal with all the other stuff that comes with it. You say, look, hi Pinnacle, I'm good at investing. You guys good at the rest of the stuff. Let's do a deal. Join up. You get some of my business. You do all this stuff for me. It's the proverbial win-win, hopefully, right?
Absolutely, it is. Yep.
Beautiful. Now let's go from the business to the investment. I've already said it's a buy recommendation for us, at least as we record this video. By the way, I'm not foreshadowing anything. If anyone's wondering, we are long-term investors. I suspect that most of the companies we talk about, the stock of the month, are buy recommendations for years into the future, but not all, not always, and not all circumstances. So I'm not trying to foreshadow anything. So everyone's really, really clear. I just want to be very clear because the internet's forever. At some point, someone watching this in 2048, Pinnacle may or may not still be a recommendation. So just want to cover that up. But let's go to the investment case itself. We will do the things we like. We will do the things that are a risk. But for now, why do you like Pinnacle as an investment?
Yeah, and just on the topic of long-term investments, I don't have the exact date in front of me, but I think we first introduced this to our portfolio in 2021 or
Oh, no.
2022. So we've held it for 3 or 4 years now, thereabouts, and I do expect to hold it for the foreseeable future as well. It's a really strong business. Funds under management, so the funds that are actually managed by the funds that it owns, $155 billion as at 31st of December 2024. And really, what Pinnacle does, as I mentioned before, with the gains that it generates from those funds, it earns management fees from them, but also performance fees. And one of the things that I really like about Pinnacle is that it's very, very disciplined in the funds that it goes after. So, from conversations that I've had with management in the past, they get a lot of funds approaching them to take an equity stake, and a lot of them they're saying no to. And I'm sort of making this up, but I'm pretty sure management said in the past that about 9 out of every 10 companies that approach them, they will automatically say no to.
Wow.
So they're
Okay.
very, very, very selective, which I really like. But I suppose one of the reasons they are so disciplined in that approach is because they are very aligned in their incentives. So their stakes in affiliates mean that they benefit when their affiliates perform well. So it's really not just a fee clipper. And I mentioned before there's two parts to Pinnacle's business. The one part is where they provide the services to the affiliates. The other part is where they take an ownership stake in the affiliates. Really, what Pinnacle does is it often tries to make the services part of its business, but basically run it around break even. It's really
All right.
trying to provide the value that it creates from that into creating value for its affiliate, where it generates its own growth. So that's one of the real reasons that I like it. I think as well diversification, and this is something that we always encourage members to have in terms of, you shouldn't have too much exposure to just the banks. You shouldn't have too much exposure to just the miners or just technology. But also, I think it's easy to forget that there isn't just equities. Ideally, people should also have some sort of diversification to other asset classes, whether it be real estate, even the family home. But really, what Pinnacle does is it provides instant diversification to multiple asset classes, as I mentioned before, whether it be equities, private equity, credit, real estate as well. So that's another real reason that I like this. And also management quality. I mentioned a moment ago the discipline of management, but also the experience. Founder and CEO Ian LeCun has a very strong record and has grown Pinnacle very sensibly and profitably from the start through that patient, disciplined, and experienced approach. Those are some of the key reasons I like it. One more that I'll mention as well is the international opportunity. So until now, Pinnacle has really dominated in the Australian market. It's now starting to shift that exposure to the United States as well. And so far, it's done quite a good job of that. So I'd like to see them take a slower approach to this, which I think they are. They're being disciplined, as is their normal go-to. But the international opportunity does have the prospect of being quite substantial if they can pull it off.
Very nice, mate. Now, I said already, that's the buy case. You like that's what we like about the business. At the Motley Fool, we don't try and be balanced per se. We're not trying to be 50-50. We're here to take a view. We're here to try and find businesses we think can beat the market. But whenever we do that, we always remember for ourselves and for our members that there are risks. There are reasons why we might, despite our optimism, despite our confidence, despite our positivity, we might end up selling the shares in that particular business for one reason or another. What are some of the risks that come with an investment in Pinnacle?
So first of all, and I guess this is a little bit more short-term linking, but it is an obvious one, market sensitivity. So Pinnacle revenue is very much linked to the funds under management. I mentioned before it's got about $155 billion of funds under management under the funds that it owns. If that falls, which it very well could do due to market volatility or sensitivity, then Pinnacle's revenue and also its gains could also take a hit. We have seen that in the past, and it will no doubt happen in the future. Volatility is a very natural part in our markets, but I think that's something that investors should really be aware of going into this with eyes wide open. The affiliate dependence as well, I think is another key one. So as I mentioned, it really tries to run its own service business, I suppose, at a break even. So it is really depending on the ongoing success of its affiliate businesses. And if those underperform or if they lose key talent, for example, then Pinnacle's earnings and reputation could also suffer. I think as well the expansion risk I mentioned a moment ago, the expansion into overseas markets, particularly the United States. If they don't take that disciplined approach, or if they do stumble in their approach, then poor capital allocation decisions could well dilute returns going forward.
Mm. That's something to be mindful of as investors. And there's always risk, right? We highlight them because members need to know. And here on our YouTube platform, we want you to know if you're thinking about an investment in Pinnacle, there are some reasons why things may not work out as well as otherwise could. I'm curious about on the risks front. Your thoughts on fees? Fund manager fees have been under a bit of pressure as well. To what extent is that part of the thinking when it comes to recommending Pinnacle?
Yeah, look, it is a consideration. I think it's something that we want to watch, but
Mm.
it's not immediately having an impact by any means. Look, performance fees can fluctuate widely year to year, leading to earnings variability. I think one of the things that you're also referring to, whether directly or indirectly, is I suppose the potential impact of ETFs going
Yeah.
forward too. So investors do have access to, I guess, lower fee ways of generating income, and that is a reality. I suppose one of the key things with Pinnacle's affiliates, though, are they are very renowned. They are very well known for generating good returns. Many of them have generated some pretty significant performance fees rather for Pinnacle in the past.
Mm.
We don't see those under any significant pressure at the moment. The other thing too is though that Pinnacle is proactively trying to protect the fees that it generates by way of attracting different clientele, for example. So, as an example, by attracting more individual investors as opposed to large superannuation funds, the performance fees that it can generate from those clients is larger as well, and it is having a lot of success in doing that so far. So, I really like the direction that the business is heading in that regard. It is something to watch going forward, but it's not something that I'm overly concerned about at the moment.
Nice, good to hear. Mate, let's wrap this one up. Give us the 60-second, 30-second elevator pitch. Why should our viewers consider, not necessarily do, but consider an investment in Pinnacle Asset Management?
So as I mentioned, it's a really attractive business model. It's a business model that is very focused on creating value for its clients, which I think is a really valuable long term attribute for a business. It's got a really strong track record in Australia, and I do believe it early days and early signs, but I do believe it is doing well and pacing well to carry that success internationally as well. And it's also a very reputable company with in-demand services. So that reputation, it does come from a strong management team, which, that is something that may not always be there. People retire, people move on, but so far the business itself has a very strong reputation in the industry, and I don't see that changing anytime soon. So a lot to like about this business.
Very nice. I call it Pinnacle Asset Management. It's actually Pinnacle Investment Management. I'll correct myself. The code is PNI. Ryan, thank you for sharing your expertise and some time with me and with our viewers. Viewers, thanks for tuning in. We hope you're enjoying it. As I said, please do like, subscribe, and hit the notification bell to make sure you miss nothing else from the Motley Fool. We've got a lot of great content coming your way. But until we speak again, Fool on.
All on.